On today's Hashi, I'm discussing monthly housing costs, U.S. commercial foreclosures, and weekly unemployment rates. Today is Thursday, April 18th. Very important date. I'll share with you in a minute. And I am Byron Lazine. The Hot Sheet starts now. Welcome into the Hot Sheet. Let me know in the live chat which market you're tuning in from. And buying Dominican Republic, by the way, I got your email yesterday. Yesterday was a little busy day with BAMFest. I'm going to be replying back today, probably on my flight out of here back to Naples. So welcome in, Matt from Raleigh. Welcome in, everybody. BAMFest yesterday. First of all, thank you guys so much for those that were able to attend. If you missed it, the replays inside of BAMX for those of you that are a BAMX member. But thank you so much for those that attended and supported BAMFest. It was an unbelievable day yesterday. Unbelievable experience being able to share that with all of you. And just thankful that we were able to nail that. Got a couple other events coming up that I'll share with you here later in the show. Obviously, one of them, BAM Camp DC, but also the Brand and Marketing Summit that 1000 Watts putting on. I want to share a little bit about that. Beth says she's loving Mosaic. Thanks for recommending it. My pleasure. I mentioned this on BAMFest yesterday. I wouldn't recommend anything that I don't use on my team. So that's one of the requirements here at BAM. It's like, if you're going to partner with BAM from a sponsor perspective, for sure, you better be something I've vetted out, something that I personally use, something that I use to generate hundreds of transactions a year in my own business. That's part of the deal. So again, thank you guys for coming into BAM Fest. Today's an important date. I mentioned it at the top of the show there, April 18th. Why is it an important date? It's an important date for us here at BAM. It's our 2-year anniversary for BAM Media. 2 years ago on April 18th, we launched the website nowbam.com. 1 year ago today, we took what we consider, hey, the only media company that provides the level of content we do without a paywall. Nowbam.com, all of the podcasts, all of the live shows, all of the social media content, all of the ebooks. We took all of that non-paywall content, built that up for an entire year. And then on April 18th, a year ago, we started BAMX. Okay. We believe that if it's information, there shouldn't be a paywall. You should be able to access that information freely. And we started BAMX a year ago so we could show you how exactly to do the things that will make an impact in your business, where you can thrive, where you can be that agent of change. So BAMX was designed to show you through the courses, through the after hours. Obviously, we've got the community, and then we started to drop in the slides and the hot sheet show notes. And then we got feedback that, hey, we want some content done for us. So now, 1 year into BAMX, we have officially announced publicly as of yesterday that we are every Friday releasing BAMX in a box. This is content done for you. 3 social media templates done for you every Friday. 2 video scripts done for you every Friday. 1 email template done for you every single Friday, released directly into our BAMX members. And so to celebrate that announcement, of course, tonight at midnight, the price for BAMX officially goes up. Everybody who was in BAMX for the first year, and you still have up until today at midnight to do this, use code FEST to get 30% off up until tonight at midnight. Everybody who is in here to BAMX on the first year, you will be locked in for lifetime at your current rate, whatever rate you came in at this year. When the price goes up tonight at midnight, it's going to more than double. It's going to reflect all of the done for you work that we're delivering each and every single Friday with BAMX in a box. It's obviously going to continue to get better from here. Those of you that have been in BAMX all year, you know exactly what I am talking about. So if you've been thinking about BAMX, do it now, because the price is going to more than double tonight. And I promise you, you'll do it later. It'll just be at a higher price. So BAMX in a box, now publicly released. And You've got until tonight at midnight to use code FEST to get 30% off and be locked into that current lifetime rate. That's our thank you for the first year BAMX members. All right. Let's go into topic number one. 1 in 5 Americans are making big sacrifices to afford monthly housing costs. This is a recent Redfin report. 1 out of 5 Americans are making big sacrifices. Americans want to own home. Okay, they want to be a homeowner. They have to make sacrifices now in order to do it. Just yesterday, I was talking to a lender, and we're talking about where the 30-year fixed rate is. And he's like, the payments are high. He's been doing it over 25 years, okay? About 25 years probably. So he's gone through the great financial crisis. He's gone through some of these other markets, right, that we've experienced since the year 2000. And he's like, these are just high payments right now. And so Americans have to not only make sacrifices right now to be able to afford that, but some have to really change their lifestyle to be able to afford it if homeownership is that important. I was talking to an agent who's only been in the business 3 years yesterday, and I said, I think inventory is going to be going up. We're talking about Connecticut with her in particular. We know in other parts of the country it's up year over year. Florida's up 57%. Texas is up 30%. Arizona's up 30%, right? You're experiencing it if you're in other parts of the country. Northeast hasn't experienced it yet. She's been in the Northeast. She's been selling for about 3 years. And she just only knows one market, no inventory. She's like, really? You think inventory is going to go up? She was like looking at me like I had 5 heads. At some point when these payments continue to be so high, there's going to be only a small majority or a small minority of people who can buy these homes. And as more sellers are forced into a situation where they have to sell or life dictates they've got to make that move, you see inventory start to accumulate on the market. While we're up year over year nationally, I think we'll be up even bigger in 12 months from today. Okay, think about all the steps to get from April of 24 to April of 25. We got to jump through some geopolitical messes. We got to jump through an election here in our own country. Inventory tends to build up 60 days before a presidential election. Go ahead and look back on that. That's pretty standard. In a normal year, probably take 2020 out. 2020 was anything but normal. But yeah, I expect as inventory, as we move forward, inventory is going to pile up. And one of the reasons is that there's just not as many people that can afford. Now, we go down to 6% on the 30-year fix. We know what happens there. Things open up. We've seen it. Things open up when we get down to 6%. You get more buyers into the market. But I'm starting to really buy into the belief that inventory levels are going to continue to go up, that prices are going to cool down. We're going to stop with this record setting of prices. They're going to cool down, maybe in some areas go down a little bit, not free fall, but prices are going to stabilize. Inventory is going to go up, and prices may even go down as more and more inventory comes onto the market. If in a year and a half, we get down to 6% on the 30-year fixed, I think even more inventory goes on to the market. And you'll have a moment, couple months, where prices can drop a little bit. And then all the buyers come into the market, and obviously they pop back up when that happens. I'm starting to buy into that theory more. It's not a theory of tomorrow, but it's one that I think is maybe around the next corner or the corner after that. So it's something to keep an eye on. Redfin, though, says that roughly half of Americans are struggling to afford housing payments. Payments are at an all-time high right now with where prices and the 30-year fixed is at. 1 out of 5 are making big sacrifices to cover the cost. People can only do this for so long before they end up putting the house on the market if this Redfin report is accurate. They're skipping meals, Redfin says. They're working extra hours. We talked about that on a recent hot sheet. Yeah, people are working extra hours. Well, why do we think we have such low unemployment? People are getting second jobs at a higher rate than they have at any time in the last 10, 20 years. Boomers who struggle to afford housing are the most likely, 27.5%, to dip into the retirement savings. One of the reasons for that is they actually have a retirement savings. Not a lot of millennials, Gen Xers, or Gen Zers have built up as much retirement as boomers. Boomers are willing to do it because it's like, screw it. What the heck's the difference, right? 27.5% are willing to dip into their retirement savings. They've also built up a bunch of it. Let's be real. The 401k has been an amazing tool for baby boomers over the years. They've rode a stock market over the last 40 years that has really benefited their ability to save. So they can dip in a little bit more. Here are the most common sacrifices people are making to afford housing. This is right on nowbam.com if you want to dig in further. Obviously, the slide will be available for you to download inside of BAMX. Took no or fewer vacations. That's 34.5%. People are really passionate about home ownership and the costs that go into it. They're skipping vacations, skipped meals, 22%. I don't know if that, skipping meals, that might just be the fasting craze. Everybody's into fasting now. So maybe they're combining two there. Worked additional hours, shifts at my job, 20.7%. That is going up. People looking for more hours, looking for a second opportunity. Sold my belongings, 20.6%. Borrowed money from friends, family, 17.9%. Dipped into retirement, 17.6%. 15% plus is delayed or skipped healthcare medical treatments. Geez. 14.7% work side hustle, Uber, delivery services. Over 14% has received a financial gift from friends, family. So borrowed money and received financial gift. Those are high numbers. I mean, when you see things like delayed or skipped healthcare or medical treatments, I mean, that shows you how much Americans value what we all do, what most of the folks on this stream do, which is help guide people through the biggest transaction of their life, the sale, the investment, the purchase of real estate. People really want to be able to own real estate, able to sell real estate someday, able to rent out real estate someday or more of it. They really value that, the folks that live in your community. You're in a special position to be able to help those people each and every single day. Don't take that for granted. Come in with a serve mindset. Come in as, hey, I work for you to get this deal done. What did Jordan Cohen say on BAMFest yesterday? I'm here to interview for the job. I'm super grateful for the opportunity. By the way, I work for you. Let's make that clear up front. You're going to be making the decisions, I'm going to be making the decisions, but I'm going to be answering to you on that decision, right? I work for you. You've got the final say. You're the chairman of the board, I think is the way he put it. All right. So more Americans struggling right now to make ends meet. Talk to the most experienced lender in your market. Have you seen payments quite like this? Are these numbers shockingly big? Okay, there's only three ways that these numbers can go down. The interest rates go down. People make more money. They get 20-30% raises. That's not going to happen. Not at scale, not when we look across the country. The average salary is not going to go up 25%. That works in smaller numbers than that year over year, obviously. Or home prices come down. Okay, the longer people struggle, like they're struggling today, the more likely is that home prices will have to move down if rates stay up. Okay, one of those two things has to eventually shift, or we're going to continue to experience what we're experiencing now, a low transaction market. All right, moving on and into foreclosures, commercial standpoint. Commercial foreclosures in the U.S. increased to 625. It's a 117% increase from the previous year, with California, New York, Florida, Texas, and New Jersey experiencing significant rates in foreclosure activity. This is commercial foreclosures, not residential. Foreclosures in the U.S. rose to 625 of them, not a big number. By the way, because you're going to hear the 117%, throw that out anytime you talk about foreclosures, even if it's residential foreclosures up 200% from nothing. Yeah, because they were at an all-time low the last few years. I mean, really an all-time low in foreclosures. So don't look at the percent, look at the number. They rose 625. Okay, not a big number. starting from January 2014, Adam has tracked commercial foreclosure data, peaking in October 2014 with 889. Okay, so now I've got that piece of data, January 2014, 889, 625. If that was the peak, okay, well, 625's something to consider, something to look at. The lowest number of foreclosures ever recorded commercially was May 2020 with 141. So we're up 5x from May 2020 with 141 cases. Obviously, 141 was an all-time low because foreclosures were stopped during that time, May of 2020. So New York's got 65% year-over-year increase. Florida's got 107%. This is commercial. Remember, commercial, state-by-state commercial foreclosure review. New York, 65% up year-over-year, 107% for Florida, 129% in Texas, 133% for Jersey. Why is this important? Well, it's going to have an impact on regional banks. We saw the scare last year with regional banking. This is still something in the background that can disrupt the economy. It's why when the 10-year got to 5% last year, Powell and the FOMC did not like it. This is too restrictive. They really needed it to move downward. It did shortly after, so they didn't have to step in. But if the rates sit there, and when they hit 5% last year on the 10-year, went 8% on the 30-year fixed, and sometimes commercial can be even more than that, depending on the bar. It could be less, could be more. They knew that some of these refinances on commercial loans were going to come due, and they weren't going to be able to, the owners weren't going to be able to flip into a new financial arrangement with the bank because they were going to be underwater with the new rates and with probably, in their case, maybe more vacancies depending on what type of commercial they own. And so they would just hand the keys back to the bank. The original banking balance sheets would look dramatically different than what they're saying today. Right now, they're saying all these properties on our balance sheets are worth this. And they're not. They're worth like down here. They'll be worth even less if they have to go take the keys back. The banks don't want to be in the business of collecting keys. We know that. If regional banks have to get into that business, we're going to see a whole bunch of them go under. A whole bunch of regional banks are holding these commercial properties. So that's why it's something to pay attention to. If we have a regional banking crisis like we saw for a moment last year, it puts the markets into disarray. We think we have uncertainty now. Just wait until that happens, if it does. And it certainly could. The likelihood of it happening will be high if these rates remain high. It's one of the arguments, I think it's actually one of the best arguments for getting these rates down. Not necessarily, hey, we all want to see home buyers be able to afford, more home buyers be able to afford housing. I'm a big believer in that for sure. But I don't want to see a whole bunch of regional banks fail. That's going to create a situation where what does the government do? Do they let them fail and let depositors potentially lose their money because the balance sheets flip on these banks? Do they step in? Does it cost the U.S. taxpayer, millions, billions, trillions? What does it cost the U.S. taxpayer? Is it worth it? At some point, do you have to let these things fail and let the market take its course? Right? These are all questions. Those aren't answers. But we don't want to be faced with all those questions if the rates stay high and the regional banks have to start making some tough decisions. Fortunately, we've been sitting here with a higher rate situation the last couple of weeks, and nothing has happened. But foreclosures are on the rise with commercial deals. And I would anticipate that they likely be on the rise in the future. So we'll continue to monitor that. It's something to pay attention to. It's something that'll impact the economy. And obviously, anything that impacts the economy is something that could influence inflation one way or the other. Another thing that influences inflation is certainly the weekly unemployment data. We look at it every single week. The week ending April 13th, the seasonally adjusted initial claims remained unchanged at 212,000, with the previous week's level revised up by 1,000 to 212. So unemployment still basically staying flat. That's the update there from this morning's release on that data. You can see the trend line here. It's really just moving sideways on seasonally adjusted initial claims. Insured unemployment is as flat as it gets. So unemployment not moving anywhere. And there's a lot of belief that the 10-year won't move until employment breaks. When they say employment breaks, they mean people losing their job. So I'm not saying you should root for that. I don't think anybody should root for that. I don't think anybody wants to root for that, but it's one of the things that needs to break in order for the 10-year to break significantly. Okay, we're still up over 4.624. Right? The mandate for the Fed is to get inflation down to 2% while maximizing employment. If inflation takes off, picks back up like it has been the last couple of months and then accelerates upward, they've got to work it back to 2%. So what tool do they have left? That's break the labor market. Okay. And so nobody wants, we keep talking about that soft landing we want to see, which is their mandate. Maximize employment, keep it as high as you can, employment, while taking care of, number one, getting inflation down to 2%. Right now, markets are uncertain about when or if the Fed is going to cut anytime soon this year. That's why you see the 10-year at 4.6 and the hot inflation numbers. Yesterday, we did get a little bit of a bounce down on the 30-year fixed mortgage news dailies read, down to 7.41. So good news there. All right, if you enjoyed BAM Fest yesterday, you do not want to miss BAM Camp DC. Early bird pricing on BAM Camp DC ends today. By the way, BAMX members, you get an extra 25% off of your BAM Camp tickets. BAMX pricing goes up tomorrow. So use code FEST if you're not in BAMX to get 30% off of the annual on BAMX. Then go over to the BAM Camp DC before early bird pricing ends and get an additional 25% off of the early bird pricing. If you can't make BAM Camp DC on June the 6th in DC, that's the next opportunity to get a BAM event, that one being live. If you liked what we did virtually yesterday, you'll love the live. If you can't make that, I'd encourage you to go to 1,000 Watts event on June 25th to the 27th in Dallas. I will be there. Eric, the broke agent, will be there. We're going to be, this event's unbelievable. I went there last year when they hosted it in Portland, now rebranded to Brand and Marketing Summit. These guys are the best when it comes to brand and how they think about it. I haven't been actually putting this out there, but there is a BAM code I forgot all about. It's 15% off. Use code BAM to get 15% off. Change is coming to the real estate industry, and now's the time to act, to make bold moves, to tell better stories, and build brands that endure. So I want to see you at 1,000 Watts event, June 25th through the 27th, to be able to do that. There's no pontification on their stage ever. So skip the pontificators, join the doers, and I will see you at the Brand and Marketing Summit in Dallas, June 25th and 7th. Use code BAM to get 15% off of the 1,000 Watt event. Thank you guys for an incredible week. 2-year anniversary of BAM today. 1-year anniversary of BAM X. To get locked in for life on that ends tonight. So make sure you do it. See you back next week on the Hot Sheet. See you tomorrow on Knowledge Brokers Podcast. Until then, toodaloo.